Good afternoon and welcome to this quick video on financial statements by Taz Hussain or Tazraf Hussain. In particular, I'm going to go through a question relating to an income statement and a balance sheet. So I'm just going to load the question here so you can see it. So this question is based on Robinhood, and you have a very simple trial balance given to you in this question. So before I would start any kind of calculations, I would identify which of these statements or which of these items go in the income statement and which of these go in the statement of financial position. Now, there's only one item here that goes in actually both of them, and I'll explain what that is in a minute. So the first item, revenue, that is part of your income statement. It's actually on the top line of your income statement. The second one is your purchase, which is also part of your income statement. You have inventory, which is stock. This is your opening stock because on the 1st of January 2015. So that is actually a mistake. That should be 2016. Might want to rectify that. But that goes in the income statement as well. Rent is an expense. It goes in your income statement. General expenses is an expense. It goes in your income statement. Light and heating, sorry I've missed, which is also part of your income statement. Now, motor vehicle is part of your statement of financial position because it's an asset. Same with your fixtures and fittings. Your trade receivable is a current asset, so that goes in your statement of financial position. Your trade payable is a liability because this is the money you owe to your creditors, your suppliers. You have bank, because bank is on a debit, it is actually an asset in the statement of financial position. Cash is positive cash, is an asset in the statement of financial position. Drawing is taken away from your capital, so that also goes in the statement of financial position. A loan is a long-term liability or a non-current liability, and that goes part of your statement of financial position. And finally, capital also goes in the statement of financial position. So the only item that goes into both the income statement and the statement of financial position is this item here, the closing stock. So that would go in the income statement and it would also go in the statement of financial position. So that's a key point to note. So now we are going to transfer this information into hopefully produce an answer for an income statement. So hopefully you've got this document to hand, so I will be referring to the figures from this question, but I won't be scrolling up and down. Okay. So with an income statement, you always, first of all, it's a habit to get yourself into writing the title. Okay. So it would be income statement. Okay. For the year ended on the 31st of December 2016, and the name of the person is Robin Hood. Okay, it's also very important to keep your presentation, as accurate as you possibly can. So we're going to have two columns. One column is for your subtotals, and one column is for your main totals. And if you remember the layout of the income statement, you always start with revenue or net revenue. Okay, and the figure that we got for revenue here is 38,500. Okay, so I'm just going to go back up for 1 second and just check that figure is correct. It is, so I can mark that off. I have now dealt with that particular element of the income statement. Okay, so we don't have any returns or revenue returns, so we don't have to put that in. So the next one is cost of sale. Now the cost of sale is calculated by doing opening stock plus purchases plus any carriage inwards that we may have. And we would minus any purchase returns. And we'd also minus any closing stock. So you can see in this question, not all these items are available. So you'll only have some of these items available in some of these questions. I think we do have opening stock, if I'm not mistaken, which is here, of £4,000. But the opening stock is here of £4,000. We have purchases also of £25,000. We don't have any carriage inwards. We don't have any purchase returns. We do have a closing stock, which is the one that goes in both your income statement and your statement of financial position, of £3,000. So our total for our cost of sale is we're going to put into the main heading over here. And this is why you have a colon to identify the answer here. So 25,000 plus 4,000 minus 3,000 should give you the cost of sale of £26,000. Okay, so now we need to work out the gross profit. Okay, so I'm going to put this, because this is a calculation that we would have to do. Okay, the gross profit is revenue take away your cost of sale. Okay, and that should give you the answer of 38,500 take away 26,000, it should be 12,500. Okay, so that should be relatively straightforward, hopefully. Okay, moving on to the bottom part of the income statement. So from your gross profit, so this is the profit you have made just by accounting for your purchases and your stock and how much you've actually sold them for. So a business will have expenses or overheads that they have to pay for regardless of how much sale they make. And most of these tend to be quite fixed elements. So you got rent. In this question you have light and heat. Make sure I don't miss any of them out. And I've got general expenses. Okay, just a quick technique. I would normally tick off from the list the items that I have used. So for example, I've used purchases, I'm going to use rent, I'm going to use light and heating, general expenses, and although I have used this, I'm going to use it again for my statement of financial position. So expenses should be, the rent is 2,400, the light and heating is 1,500, and the general expenses is 600, which will give us the total of the expenses. Again, we would put the answer here because it's the main total, which would be 4,500. Okay. And finally, we will calculate the profit for the year, the profit or loss for the year. Okay. And that's calculated by working out your gross profit minus any expenses. So in this case it will be 12,500, take away the 4,500, which should give us a profit of £8,000. Okay, if it's a loss, you will put that in a minus. Okay, so that concludes the first part of how to make an income statement. Moving on to the balance sheet. Very quickly I will go through how to deal with the balance sheet. So we'll start with our first item, which is a non-current asset. Okay, so a non-current asset, in this question we have motor vehicle. We also have fixtures and fittings. Okay, don't worry about the 3 columns just yet. We will come across depreciation later on in the course. So we have 10,000 for your motor vehicle, and we have 5,000 for your fixtures and fittings, which is 15,000 in total. You then have your current assets. Okay, for your current assets, you've got inventories of £3,000. You have bank for £15,000. So 15,100. You have cash for 200, and you have trade receivables 8,800, which is a total of 27,100. You then going to give you a second to put down your current liabilities. Okay, so your current liabilities is trade payables of 9,100, and then we have to calculate the net current asset. Net meaning the difference between the two currents, i.e. current assets minus current liabilities, which in this case would give you 27,100 take away 9,100, which is 18,000. Okay, and then you have net assets. So this is your total assets that you have in the business, which is going to be 18,000 plus your 15,000 on top here, which will give you £33,000. Okay, so that completes almost the top half of your balance sheet. We also need to put here the long-term liabilities. These are now actually called non-current liabilities. Okay, so in this time you have a loan for the value of £12,000. Okay, you take away the loan from your net assets, you would end up with a value of the business of £21,000. So 33 take away 12 equals 21,000. So very quickly, a finance buy is basically how you pay for the assets. So you will have capital, you will have profit for the year, and you would minus any drawings. So I'll let you put the figures in. You can say you have capital 20,000, profit 8,000. You minus the drawings because it's taken out of your capital, and you should end up, hopefully, if you've done it correct, you should end up with the same figure from the top half of your balance sheet. That's why it's called a balance sheet, because the top half needs to balance with the bottom half. Hope you found this video useful. If you do, please like it. Thank you, and hopefully it's going to help you to complete some of the questions related to the financial statements. Thank you.